Hey guys, welcome to my YouTube channel. Uh, this is Meg Modi, and I welcome you to this video log where I'll be discussing more on technicals, and we'll be covering various different asset classes that can possibly, showcase us more about technicals and how it has been placed, and what else can we do where we can have an alternate scenarios. So everything is going to be discussed here. Obviously, I'll be also welcoming your views as well, where we can actually discuss on pretty good aspects about the various asset classes. But yeah, starting with this, maybe we could possibly ensure that what kind of different asset classes that we can discuss. So starting with, obviously, with DXY, and since I've been using this from quite some time, the Elliott wave, and how it has been working in that scenario, I have discussed more on 2 3 years perspective on DXY, and obviously I'll be showcasing this particular chart where we can actually work on it, how it looks like, and how else what other scenarios we can open up going forward. So this is where 114 top was formed in the year 2022 September, and from there, if you see, it has come down. This is a weekly chart. Obviously, I'll be going on the daily chart as well, but if you see here, this has gone down in three wave structures, and then again there was this big three wave structure which took from July 2023 to 2000 Jan 2025, and after that there was this plunge in the price. If you see, the plunge was very fast as compared to the rise. So if you see the retracement also, like uh, the projection was as good as 78-80% of the entire uh, A to B, and that is how the C was measured. And now, obviously, it is moving in a kind of consolidation pattern. So my take is that this entire correction is done, and the possibility of dollar index to rise this year is quite likely. That means there are two reasons of it. One could possibly be that buying for the safe haven demand, where you see dollar index also rising. Other is that genuinely dollar will start rising, and we might see euro dollar going down, and at the same time we could see other asset classes like uh, uh, gold to start correcting. That could be one of the reason, but not necessarily. So we also have to ensure that there could be a reason where we see global equity markets falling down and dollar index and gold rallying together. That could also be your safe haven rally. So that are different scenarios that I have put in, but let's focus on this first, how I'm saying this. So let me go to daily chart. This is daily chart, and this is how it looks like. Say if this is your VOC, which is ended here in a ending diagonal kind of a pattern. Yeah, so this is how it looks like ending diagonal, or maybe something like this. And this is where VOC has ended, and this is the first leg on the higher side. This also looks to be view A to me, or maybe two. This is view B, and then view C on the higher side. So something like this can turn up. This is now the view B is still ongoing, probably testing the support of this particular trend line, and then bouncing back from here, probably towards 101 or maybe 102. That could end the first leg of view A on the higher side. Then we could see view B coming back towards where view B has ended, and then view C on the higher side. So something like this can happen. So I'm of the opinion that something like this formation can happen by this year. So this is my forecasting for dollar index for 2026. Obviously, this could be some more time, but if you can ask me on the shorter time frame, so this is something which is my shorter time frame, where we could see wave C coming in, but wave B is still ongoing. So I think 97 probably would be acting as a very good support for dollar index on the lower side, and on the higher side maybe 101, say 102 is something that I'm looking out for. So overall, the bias is very much positive for dollar index. On the lower side, I think one should start buying, and overall I think it looks great on the lower side. Now the second is your dollar, euro dollar. And if you see, euro dollar has been like consolidating from quite some time. Now many would believe that this probably could be your extracting triangle at the top. Many could believe that this is just a kind of consolidation and then we could go higher, but my take is a bit different. Now if you see the, so let me take the weekly chart, and that could give you more insight about how it looks like. So whenever your euro dollar, or whenever your GBP dollar has been moving, it has been moving in a three leg structure. There is absolutely no five legs. If you see here, this has also been a classic three wave structure where the entire correction was done. And if you see here also, this also looks to be your classic three wave structure, right? So this is also ABC. And now if you see closely or watch closely, this has almost completed your 100%. Almost, it has completed your 100% of the entire ABC, which has started from 2022 end, October 2022. And so that means almost 1.5 year, almost 2.5 year, this entire rally is completed, and that means your view A has been formed. So this is my view A. Now we could see wave B coming down. Okay. So and then wave C on the higher side. So something like this is my yearly projection where we could see wave B coming down. Obviously 2.5 years for wave A, so wave B will take more time as compared to A. That probably could take around more than 3 years or just to complete wave B. So overall, I think going in this year like 2026, I am of the opinion that euro dollar will continue to remain under pressure. Obviously, some ups and downs cannot be ignored, but um, overall, my view would be negative for euro dollar. And at the same time, uh, this is how your daily chart also looks like, where we could just come to a conclusion where this the height of these two shoulders like is almost equal. And if you see, this is my neckline. This also looks to be an extracting triangle kind of a situation where your first leg is higher. So this is how your neo wave triangle looks like, where this is A, this is B, C, D, and E, which would overall, make not as ABC, but it can make this as W, X, and Y. Right. So if this is true, if this is a extracting triangle at the top, this will eventually become WXY, and then wave E in triangle will complete in wave Y, and the entire 1 2 3, which doesn't looks like W impulse. Obviously I'm forcing impulse here, but if you see here in the daily chart, there is no five waves which I can clearly count. Like one cannot be so small. And if you see here, if this is 1 2, the 1 2 3 4 5, 4 and 5, in wave 5 also, if you see, the entire structure looks to be a bit overlapping, right? So 1 2 3, the three doesn't have three legs or five legs in it. So all these structures here and all this structure here looks to be overlapping to me and looks to be corrective to me. It's not a classic impulse wave. So that is again, and so obviously many analysts are taking it in a different way. My calculation is in a different way. um, if someone has to take ABC, they can take ABC complete AC year, then this is a corrective formation. If someone has to take WXY, they can take WXY completing wave E year and wave Y at the top, and that probably would end it in and open another wave A on the lower side, then wave B and wave C. So this is how your dollar rupee sorry euro dollar is poised, and this is how it will eventually turn out to be. So overall structures looks to be something like this, where um, this entire leg is completed, and this will start in both the cases, whether it is ABC or WXY. Now what will follow is another ABC on the lower side. So that exactly what I wanted to showcase, and all wanted to speak about, that this is something which I am looking out for GBPUSD. Again, the structures looks to be very much similar, but the only contention here is that if you see a weekly chart, um, yeah, so if you see a weekly chart, again, three waves on the higher side. Now there are two ways of measuring it. One is, of course, if I have to take a projection, if I have to take from this particular leg to this particular leg, so it has almost completed 61.8%. If I have to just take it from here to here, then there is still further room for 61.8%. So this is another miscalculation or misunderstanding about how prices are going to be in focus. But if you see your daily chart has a different version of it. So uh, let's see if this is your A, this is your B, which took more time as compared to wave A. And so if I have to also say that how much time, so let's take the date range. So this is where the bottom was formed, and if I have to take this as A, right, so it has taken like 295 days or 193 days, that is trading days. And from there, from year to year, it has taken more time, as good as 880 days, right? So 386 days, yeah. So that means it is definitely wave B. But what if this is not wave ABC, but what is if it is WXY? So if I have to take this as W, maybe W, and then X, and then Y, this can also be an alternative opening scenario where we could possibly come up with this conclusion, that this is WXY, where Y is still ongoing, or maybe Y is completed. So this is a setup. And now what we are expecting is either this has already completed a first leg of wave A on the lower side, wave B, and then wave C. So something like this is I'm expecting. So as of now, wave B can probably go towards 1.3637 odd. We are at 1.345, so we still have a lot of room, even if it's going and the 80% comes to around. If it is a flat, the 80% comes to around 1.363. So that is something I'm expecting on the higher side, and then a fall in price. So yeah, that all coincides with your dollar rupiah as well. Sorry, dollar index as well. So this is something which I am focused on. Now, the last but not the least is very important. That is your 10-year US 10-year yields. So US 10-year yields now looks to be moving in a triangle pattern. Now this can be your wave 4, this can be your topping process, I don't know. But what I can definitely say for shorter term perspective, there is a possibility for wave D to start opening up, or it might have unfolded and it has started moving higher. So this means that the possibility for 10-year yield to go towards 4.50 is quite likely in this move itself. So that means in this move, it should not take out the level of 3.94. In fact, it should go towards 4.50 in this up move itself. That means your dollar index cannot come down. It has to travel higher, it has to move higher, and that probably will also have an impact, a significant impact on your euro dollar and your GBP dollar. So overall, the everything looks to be in synchronization as per what DXY looks like, as per what your 10-year yields looks like, and your euro dollar and GBP dollar. So this is the overall structure of your currencies. Now coming back to your gold, which looks to be a quite decent, looks like a very decent up move, a lovely movement on the higher side. What we are right now seeing is some kind of a kind of consolidation post this dynamic fall that we could see. This is a daily chart, and if you see your hourly chart here, then yes, there is a fall which is still left. Even if I have to take this as wave A and view B, and this will be view C, this will complete my first leg on the lower side. So this can coincide with the with this particular level of 4.1 4100 or maybe 4160 70 odd levels or near to that. So 42 4200 4200 and maybe 41 4160 70 is something that I'll be looking out for. uh, this is my view B, this is my view C. Okay, and if I have to take a projection here that how much fall is still left, and it's 61.8% comes to 4245, and your 80% comes around 4200. So 4200 is something that I'll be looking out for gold going forward. And if once this is done, then probably again there is a scope for gold to go higher. But as of now, fall is very much something which I'm looking out for in gold. 41 $4200 is something that I'm looking out for. A similar structure can be seen in silver as well. Like, it has gone towards $84, now it has come back towards $72. And if you see here, some kind of a consolidation which has happened here, where we could see that triangle kind of formation. If in case if it is not a triangle, then also I would mark this as view A, this is view B, and view C on the lower side, which still has a lot of plenty of room for the price to go down, right? 61.8% comes to $66.50, and 50% comes to 68.60. So somewhere close to these levels, I'm of the opinion that we could see silver coming down, not immediately, but yes, slow and steadily. But since it is wave C, then the movement has to be very fast. But that again will not say complete the entire correction. It will open further correction on the higher side. Say if this is completed, this probably could be your wave A, then wave B, and then wave C. So this could also be an overall yearly, um, yearly kind of your projection price projections going forward. So now obviously it is too early to come to that particular point, but as of now this is where what I'm anticipating, and this is what I'm seeing in silver. So this could be your weekly target, your couple of week target. I'll obviously come back on next Sunday to give you more insight about all these asset classes that I've covered this week. But yes, um, this looks to be more organic way of explaining as per your wave theory. So this is your silver. I am of the opinion that it should tumble towards $68 to $66.50 in couple of weeks time. So currently we are at 72, so there is still more room for the price to go down, and it will happen. If you see here, this is your LME weekly chart of copper, right? So copper was, after silver, it has been the best asset class, where the returns were generated fantastically well. And not that also, in fact, from 2020 you could see that there was this humongous rise in price of copper, and then obviously there was this consolidation that has happened, and again the move that has started. But if you see here, um, I'm of the opinion that this could possibly be an, kind of a expanding diagonal pattern, something like this. Yeah. So this is again a near wave structure. Particularly, we could see this in our in commodities and forex. And if you see here, this is more like an overlapping structure. So if I have to take this as wave one, which looks to be five waves in it, and which is very much clear. In fact, in wave three also there is this five waves. So this looks to be an expanding leading diagonal kind of a pattern, right? So if I have to calculate as 1 2 3 4 5, it is simple to calculate 1 2 3, and this probably will be my fourth leg, and this will be my fifth leg, right? So this is one of the particular way of looking into it. Another is that your wave, wave four, which was terminated here, has not overlapped wave one, but your part of wave four has overlapped wave one, right? So as per Elliott wave, none of the parts like of wave four should overlap wave one, but Here it has happened, so I have considered this as an leading expanding diagonal pattern. So this can be the start of the super trend cycle of wave one. So normally leading diagonal or expanding leading diagonal comes in wave one, right? So that is where your copper has started. And if you see here, uh, how to project the target, right? So if I have to take this out and say that this is my ABC, and this has completed my another ABC here. So this is A and this is B, WXY or ABC, or WXY. So let me take it as a WXY only. Let me take this out and say this is my W, X and Y, and wave 4 has been completed here, right? And this is my wave 5 which has started. So this can possibly go towards, say if I have to add it from here to here, you know it probably could go towards 14,450 odd levels, which is equality of wave 1 to 3, wave 0 to 3 added to 4. So 14,000 to 15,000 is something which I am projecting for copper when it comes to my view counts like this. And it looks to be a fantastic you know kind of a pattern that I could see from here. And at the same time, all the factors that are affecting copper, or in case if there is you know this Venezuela thing that has happened overnight in last two days, we could see prices of copper when it comes to mining. So last year there was this mining issue where the supply uh, was taken out, in the sense it was crunch, supply crunch happened, and the demand started moving higher. And now obviously the AI factor, where most of the chipsets has been used, copper has been used there. But all these factors are actually supporting the price of gold, oh sorry, copper, and that is the reason why we could see copper going higher from here. So yes, I mean, there's a breakout, we could see that. And from there, that the breakout 100% comes to 14,450 and something like that. So overall my projection for copper looks to be positive with these calculations here that I've done. And yeah, I mean, overall positive for copper. Zinc on the other hand, again, it looks to be good enough for me. Something like this, where we could see you know zinc prices going higher, even if this is your ABC. So the 61.8% comes to around 3657.95. So I'm of the opinion that prices should rise towards that level, which is, I mean, currently it is at around 3100 odd, I guess. Yes, 3100. So move 500 points on LME zinc futures cannot be ignored. So my view for zinc is positive, and since this is where wave A has ended, this is wave B. Wave C should at least travel to that level. So now 3650 is something that I'm looking out for. Even if I have to take the projection of ABC, 100% comes to 3600. So somewhere close to 3600 to 3650 is something which I'll be focusing on, at least for this year. For near term perspective, yes, I mean, 3250 or maybe 3200 is something that I'll be looking out for. So that's the overall picture for zinc. Now coming to energy, starting with your WTI, this is a fantastic setup, where if you could see, there was this wave X in a triangle kind of a formation, and after that there was a three wave structure on the lower side which completed wave Y. And this is a recent top which was made in 2022. And if you calculate the projection here with this, I mean, there is this 38.2% where view Y has been consolidating. Now since there's this Venezuela news coming in, where US has attacked Venezuela and have captured the former president of Venezuela. Now Venezuela obviously has a lot of reserves in terms of gold, in terms of natural gas, in terms of crude oil. So all of these things have been actually there. And now since it has been captured by US, it comes under US now. So this looks to be where we might see a gap up move in both these prices, whether it is US WTI crude oil or whether it is natural gas. If that happens, like if US comes up, obviously some kind of follow up action in price could happen, a gap up move. This can start a new leg on the higher side, right? So since this is done, we might see another ABC on the higher side, something like this, which will be A, then B, and then C. But I'll be focusing more on wave A, and the best of the levels which we could see from here is somewhere close to $77. So $20 jump from here cannot be ignored. Not immediately, but yes, at least in a week time, or maybe in this month, I'll be continuously coming back on this video log and keep giving you insights about this. But yes, my view for crude oil would be positive from here. Right. So this is how it looks like. And the last but not the least is our favorite NG. Um, yeah, it has moved in the way we were of the opinion. And even if you have to see this, this is your 61.8%. Right. And this looks to be completion of wave A to B. Yeah. And this is your wave C. And uh, this is the retrace projection where it is completed 80%, right? So that means now since it is a weekly and we have, let's come to daily. Daily may we could see there is this first fall which has happened. Let me clear this chart. The first fall that has happened, and now since this has happened, this is wave A, and we can see wave B coming higher than wave C. So what, in the internal structure, this is something which is view A, B, and C. This will complete my view B on the higher side. So yeah, I mean this is something which I'm looking out for. So maybe somewhere close to say if this the first fall looks to be dynamic. So this is A. I would not like to count it as five because I could not see five waves. But yeah, one thing is certain that the first leg was view A. So let me see the retracement first here. The retracement towards 50%, which comes to 4.50, is something which I'll be looking out for going forward, right? So my take on this is like very much positive, and going forward I think natural gas should start moving high up after this tremendous fall that we saw in the month of December. And obviously before that, in the month of October and November, we saw a tremendous rise in the price, obviously winter due to winter season. But now since there is this counter correction which is going to happen, my take is simple. It should go towards 4.50 and then it should start tumbling down. So on immediate basis, 4.50 is something which I'm looking out for. Yeah, so this is something which I wanted to conclude in my video today. If you have liked the video content, please do not forget to subscribe my channel, which is Meg Modi at Market Analysis with Meg Modi. And if you have any questions, or if you want any of the asset classes to cover on the subject, on any subject, whether it is technicals, whether it is Elliott wave, Neo wave, please you can DM me, or maybe you can just add on the comments so I can read and I can come back to you. The next video will be on the next Sunday, and I'll be covering Bitcoin and Ethereum in that video. But if you have any other suggestions, please do not forget to mention in the comment section. Thank you so much. I'll see you next Sunday. Thank you.